Alright, welcome back. I went for an event, and I tore down the illusion that we trade in a neutral, global space. I showed how your location builds a psychological bubble around you, influencing everything you see and do. The response was insane. Thank you. It clearly hit a nerve. But after that event, a question kept popping up in my DMs. It was a more uncomfortable, more pointed question. It wasn't just, how does my location affect me? It was, okay, but is my location holding me back? Are some countries just better for traders than others? And honestly, we have to talk about it. Because the truth is that the global trading playground is not level. Not even close. Your passport, your tax code, your local internet speed, even the dominant personality traits of your culture, these aren't just background noise. They are fundamental parts of your trading edge or your trading anchor. Today, we're going deep on the hard realities of geographical inequality in trading. This isn't about motivation or skill. This is about the cold, hard structural advantages and disadvantages baked into the map. We love the story of the lone trader in their bedroom, connected to the world, competing on pure merit. It's a powerful fantasy, but it ignores the infrastructure, the rules, and the societal context that bedroom is built upon. Think of it like this: two athletes with equal talent. One trains in a state-of-the-art facility with the best coaches and nutrition. The other trains on a rocky field with worn-out shoes. Who has the better chance of winning? Trading is no different. The facility is your country's financial ecosystem. So, what are the dimensions of this uneven field? Let's break them down. 1. The regulatory jungle. This is the biggest one. Regulations determine what you can trade, how much leverage you get, how your broker treats your order, and how much of your profit you keep. In the United States, you have a mature, if complex, system. Payment for order flow, PFOF, is prevalent, which has pros and cons. It can mean zero commission trading, but also potential conflict of interest. The market is massive and consolidated. In Europe, it's a fragmented patchwork. Germany might have PFOF venues like TradeGate, while France does not. The UK operates on a different system, the RSP network. New regulations are constantly shifting, like bans on CFD promotions in Spain. This fragmentation alone creates a huge disparity in access and cost. In many emerging markets, regulations can be overly restrictive, banning certain instruments outright, or so lax that fraud is rampant. Your toolbox is legally limited before you even start. 2. Market infrastructure and access. Can you even get to the game? The scale difference is staggering. The entire European retail equity market is about 20 times smaller than the US retail market. More volume generally means more liquidity, tighter spreads, and better execution for you. Brokerage maturity varies wildly. The 2024 Global Retail Investor Outlook found that 40% of US investors use a single provider, signaling a mature, consolidated market. In Ireland, only about 40% use self-managed accounts at all, pointing to a nascent sector. Basic infrastructure matters. In India, a huge growth market, about 22% of adults are still unbanked. If you can't easily move money, you can't trade. 3. The financial literacy gap. This is the silent killer. You can have the best platform in the world, but if you don't understand what you're doing, you're just a more efficient loser. The same report shows that only 27% of Indian adults are considered financially literate, roughly half the rate of the UK or US. In the US, 43% of investors are exposed to financial education before entering the workforce, compared to a 34% global average. That's a nearly decade-long head start. 4. The tax blow. This is where profits go to die. Your country's tax policy is a direct subtraction from your edge. Imagine making a great trade. In the US, you deal with capital gains taxes. In Ireland, however, you're facing a 33% capital gains tax rate, one of the highest in the EU, which the report directly links to lower participation via tax-advantaged accounts. That's a massive psychological and practical barrier. The government becomes your biggest, most guaranteed loss. 5. Cultural psychology. We touched on this last time, but it's worth repeating. The 2024 research on herding behavior shows national culture directly influences how people trade. Are you in a culture that values conformity and risk aversion, or one that celebrates individualism and speculation? This shapes the herd you're part of, whether you want to be or not. Now, let's internalize this. This isn't just an academic list. This is the daily reality for millions of traders, and it creates unique psychological traps. The frustration and resentment trap. You're doing the work. You're studying the charts, but you're paying higher fees, getting worse fills, and watching 33% of your win get taken. This breeds a deep-seated resentment that can poison your discipline. You start blaming the system for your losses, which removes personal accountability, the death knell for improvement. The information inferiority complex. When you're in a market with less coverage, fewer analyst reports, and a language barrier, you feel behind. This can lead to either paralyzing inaction, I don't know enough, or reckless action based on the first piece of English language news you find, which is often late or shallow. The isolation amplifier. Trading is lonely. But if you're in a country with few retail traders, no local communities, and no one to talk to about charts, that loneliness is magnified. You have no soundboard for ideas, no one to call you out on your biases. Your echo chamber is just your own voice. The learned helplessness surrender. This is the worst outcome. After facing constant structural headwinds, a trader can simply give up. They believe success is impossible for someone like them, from where they're from. They attribute all outcomes to this external, unmovable force. This is the psychology of a defeated player, and it's a direct product of their environment. Conversely, being in a good location like the US comes with its own psychological risks, overconfidence and normalization of privilege. When things are easy, cheap access, great liquidity, tons of information, you can start to believe your success is all due to your genius. You underestimate the tailwind your geography provides. This sets you up for a catastrophic failure when you eventually face a storm that your skill alone can't navigate. So, what do you do if you're not born on third base? You don't give up. You get strategic. Your mission is to bridge the gap between your location and the optimal trading environment. Here's how. 1. Choose your battlefield. The broker hack. Your first and most important decision is your broker. You must look beyond your borders. Find an international, reputable broker that gives you direct access to the largest, most liquid markets, like the US. Your goal is to import the best infrastructure. Yes, there might be currency exchange steps, but this is often far better than dealing with a limited local broker. 2. Declare war on the literacy gap. You cannot outsource your education. If your school system failed you, you become the university. Use the vast, free resources from other countries. The SEC's educational material, the CFA Institute, reputable finance YouTube channels, like this one. Consume content from the markets you want to trade in. Make your information diet global by design. 3. Master the tax maze. Ignorance is expensive. Your first profitable year should not be a surprise tax nightmare. Consult with a local accountant who understands international trading. Know your liabilities cold. Factor taxes into your risk-reward calculations from the start. In a high-tax country, your profit targets must be correspondingly higher. 4. Build a digital tribe. Combat isolation by building your community online. Find Discord servers, Telegram groups, or Twitter spaces focused on your trading style and market, not your location. Your peer group should be defined by strategy, not nationality. 5. Turn your disadvantage into a lens. This is the advanced move. Your local knowledge can be an edge. You understand the cultural nuances, the local companies, the economic mood of your region better than any foreigner. Can you find mispricings in globally traded assets of local companies? Use your inside view of a herd to anticipate its movements. Your location isn't just a barrier, it's a unique dataset. Let's wrap this heavy one up. The point of this video isn't to make anyone despair. It's to replace blind frustration with clear-eyed awareness. The level playing field is a myth. Some countries are better for traders than others. The US, with its scale, maturity, and access, is a clear outlier. For a trader in Ireland, India, or countless other places, the path is objectively steeper. But here's the ultimate truth. The most important geography in trading is the one between your ears. Aware, disciplined, and strategic trader from a bad location will always beat a lazy, overconfident trader from a good one. Your edge was never supposed to be given to you by your government or your broker. Your edge is built through your ability to see the game for what it is, understand your unique position on the board, and make moves that account for all of it, including the tilt of the floor beneath you. Your assignment this week: I want you to do an audit, not of your trades, but of your country. What are your specific structural advantages and disadvantages? Comment below with your country, your biggest structural challenge, tax, access, fees, etc., and one step you'll take this month to mitigate it. Let's turn this frustration into a map. Let's turn this map into a plan. If this deep dive into the unseen structures of trading hit home for you, then you know what to do. Share it with someone who needs to hear it. Subscribe for more uncomfortable truths. And remember, the game is hard, but understanding the rules is the first step to winning it. Stay aware, trade global.